What's going on, world? Welcome to another edition of Insightful Principles. This is episode 53, and within this episode, I want to discuss technical analysis and how you're able to use technical analysis to be able to identify trends and patterns, to be able to determine future price movements within the market. Now, no matter which asset that you're deciding to invest or trade, whether it's cryptocurrency, forex, stocks, futures. Technical analysis can be used across all of these different asset classes, and it allows you to be able to identify trading opportunities or trends that can help when it comes to investing. And it also gives you the ability to identify turning points in the market as well. And one thing that's most important when it comes to using technical analysis, you are able to identify bearish and bullish signals, which can allow you to be able to determine what exactly is happening in the market. Now, I did want to explain for those that may be hearing, about stocks, cryptocurrency, or forex for the first time. A stock is essentially when you own shares in a company, such as Apple or Google, for example. And cryptocurrency, they're digital assets that are based on a decentralized network that uses blockchain technology. And decentralized simply means the transaction doesn't require a third party approval, such as a bank, and blockchain technology is a network of computers that identify the transactions on a distributed ledger. So Forex is in a global market and you can trade this in currency pairs. So for example, you could trade the euro versus the US dollar. So those are the differences between those asset classes. Now, looking at technicals of whichever asset you decide to invest or trade is essential to your success when it comes to the market. Now, in episode 17 within this channel, I did talk a lot about fundamental analysis, which is also important. And fundamental analysis is when you're looking at the company's financials of a company. So you may look at the assets, the liabilities, such as the revenue or the expenses. You may look at an earnings report or anything along the lines that describes the dividends for a company or even the management of the company. Whereas when it comes to technical analysis, you're really identifying historical price patterns or stock trends on the charts. Now, most of the examples that I'm going to go through out this video are going to be simply stocks. I will do a couple cryptocurrencies, but I definitely wanted to go over some examples here, and I'm going to share my screen here shortly so we can go over some examples when it comes to technical analysis. Now, before I move forward, if you all could please like, subscribe, and share this video, that would be greatly appreciated. Also, being able to share this amongst your family and friends, that also would be helpful with just being able to spread this message when it comes to financial literacy. Now, technical analysis, it gives an investor the ability to look at past trading activity and price movements to use those as valuable indicators to determine a security's future price movements. So many investors will use this analysis to forecast how supply and demand reflects the market price movements of a security. So, for example, what I tend to like to look at is candlesticks because they really allow you to look at how supply and demand affects the price movements of a stock. So, I'm going to go ahead and share my screen now so I can give you all some insight on a couple of things that will be very helpful when it comes to technical analysis. Because one thing that you certainly want to look at is you want to pay attention to being able to identify different patterns and what can be happening this relative to the market that can allow you to be able to base a financial decision to being able to make a smart financial decision. So I'm going to share it in one moment here. I'm going to get everything pulled up. But one thing that I also did want to mention as well is that when you're looking at a candlestick with technical analysis, if the close is above the open, this is indicating that there is a bullish trend forming. The market is rising at this moment in time. So I'm going to show you an example right here where it makes a lot of sense. So as you can see here, these are candlesticks that really disclose the two differences between they're really the same candlesticks, but they're really showing you how a candlestick is formed. So when you have the end of the candlestick, which this is called the wick, you have a high, you have a close, then you have an open, and then you have a low. And then the same thing for the second example. The only difference is really showing you the difference between a bullish candle, which you can see on the left, and then a bearish candle that you see on the right. Now, it doesn't really matter the color of your candlesticks. I know when I am doing my technical analysis, I usually use green for bullish and then also red for bearish. But whenever the close is higher than the open, this is stating that this is a bullish trend forming. So as you can see here with the example on the left, that's essentially what that means. Now, if the close is below the open, which you can see on the right, this classifies that there's a bearish trend forming. So this can signify that the market is declining during this period of time. Usually when you see long bodies of a candlestick, this does display strong buying or selling pressure. And if you see a long body candlestick where the close is above the open, this means that there is a demand of buyers taking control of the market to push the price up. Whereas if there's a long body candlestick and the close is below the open, then this shows that there is selling pressure that controls the market that will bring the price down. Therefore, the supply of the stock is decreasing during this bearish trend. So I'm going to show you another example here that really shows what can happen when you're looking at the supply and demand of a candlestick and what can cause a bearish and a bullish trend. So let me go ahead and show you this information here now, because all of this information is very helpful, especially when you're looking at the market. Because I always like to say, when it comes to technical analysis, it's essentially a story within the story. And if you're not able to really identify what's going on, then you're not able to really make a decision that can allow you to be able to take advantage in the market. So this is Cardano, ticker symbol is ADA, and this is of course, the cryptocurrency. And what I want to explain to you is what happens when you see a situation where the close is higher than the open, and what can cause it to increase. So as you can see right here in this main section right here, I'm going to highlight it here for you all so you can kind of really get an idea of exactly what's going on here. Um, but if you take a look here, right at this point right here, if you really look here, you can see this was back in March 16th of 2021. With this candle, you can clearly see that the close was higher than the open. So with this position, it closed at $1.25 on this day, and it opened at $1.03. So this is a long body candlestick, and this is also, in most situations, you would hear a bullish engulfing candlestick, because what it did was it completely covered the previous candlestick. And this is a great situation where you can look to see where there's a bullish trend about to form, because when you see a bullish long body candlestick that completely engulfs the previous candlestick, it can create a bullish trend. And as you can see here, it went all the way up. It went all the way up to, it closed at $1.37. So, and then of course, with the second candle, it completely engulfed the previous one. So then you begin to see uh, a bearish pattern with the trend here. So this is very great of understanding when you're looking at a bullish candlestick and then a bearish candlestick. And in this situation where there was a bearish candlestick, the close was lower than the open. So as I explained previously, when the close is below the open, then that's what creates a bearish trend. So you can kind of see there in that one example, which was right here in this main area, where there was a situation where it moved from bullish to bearish. And these are great points to look at when you are doing your analysis, so you can be able to make those effective decisions within the market. Now, some of the most common technical indicators that I like to use are the moving day averages, which means it measures the average price of a stock during a period of time. I typically use the 50 and the 200-day moving averages. So if I look at a stock and I notice the 50-day moving average moves above the 200-day moving average, this can signify a buy signal. Whereas if the 200-day moving average moves below the 50-day, then it also could be a sell signal. So I want to show you an example for when it comes to the moving averages. So I have Apple here, and I'm going to, for now, I will talk about support and resistance shortly here, which are also indicators that you need to focus on and that can really give you a great understanding of what is the high of a stock and the low of a stock. But one thing that I did want to focus on here are the moving day averages. So just give me one moment here so I can delete this support and resistance. Doesn't want to delete here for me. But okay, we're not going to even worry about it. We'll keep going here. What I want you to see here is, okay, so I have a 200-day moving average, and then I also have a 50-day moving average. The 50-day shows the blue line, which the blue line is essentially right here. It's highlighted. It's $127.78 is the 50-day moving average for Apple right now, and this is over a period of a year. So I'm looking at a year time frame. This is on a daily time frame. I'm looking at the last year, and the 200-day moving average is around $123.91. So as you can see, the 50-day moving average is actually higher than the 200 days. So in this situation, I'm looking for signals that can signify me buying into the stock. Now, Apple, of course, has been fluctuating tremendously. As you can see here, the most recent, the highest is has been since the beginning of this year. It was at $142.92 back in January 25th of 2021. It hasn't gotten back to that point since that date. So right now we are experiencing just in the tech industry in general, some volatility. But Apple, like I said, as of the previous market close, it was down. But like I said, right now it's very it's very close. It's over the 200. It's right under the 200-day moving average. Right now, the price is at $126.90, and actually it's above the 200-day. So, and for the 50-day, it's about right at the same. It's slightly under the 50-day as well. So the 50-day is actually $127, and we're at $126 now with Apple. So definitely, Apple is a company that I'm invested in. And there is a upward trend starting to form. Of course, there has been a little volatility lately, but when it comes to looking at those moving day averages, I like to look at that. And the next thing that I like looking at is support and resistance. So support is essentially, it represents the low level of a stock over a period of time, which essentially is the floor price of a stock. So if you look here, when it comes to Apple, I have my blue line here, which I'm going to change this color so I can make this a little bit more easier for you all to see. And actually, you can see it right here in the box. So the support here is at $121.26, and resistance is at $133.56. So with the support, I'm looking at, it's the floor of the stock price in a certain period of time, meaning the stock has a hard time coming back to that level and dropping below that level. And usually those are buying opportunities when it's at its support level, because if it shows a track record of not going past that specific stock price, then I know I have a great probability of it increasing and only increasing from there because it hasn't dropped below that. Whereas the resistance, that's more of the ceiling price when it comes to the stock over a period of time. So with the resistance, I look at it as a ceiling price, meaning that this stock has not went past that level over a period of time. So $133.56 is the resistance level for this stock within the last year. So that could also be a point where, most people, they tend to either take profits, or they look at it as possibly a sales signal if they're a short-term trader and they're really looking at, okay, I want to kind of get in and out of this position. You can use support and resistance to be able to find your entry and exit points. That's the way I look at support and resistance, and it really allows you to be able to make a decision with having a trading strategy when it comes to your technical analysis. Now, also when it comes to this, these indicators are allowing you to look at chart patterns and price trends that help with identifying an upward or a downward trend. Now, history tends to repeat itself. So technical analysis, it helps an investor spot different price movements that create the same cadence over time. And when you see the same repetitive nature of a stock price, is often the result of market psychology. So this is usually driven by fear or greed, and using certain chart patterns, it helps with analyzing these emotions and frequent market movements to understand trends. So, I do want to go over one example to kind of really understand just the cadence of the market and how it can continue to repeat and do some of the same similar things over and over again. So another one that we can look at is AMD, which they're in the semiconductor space, which is another one that I really like. And as you can see here with the 200-day moving average, this stock is actually around $84.02. And then when it comes to the 50-day moving average, it shows here about $76. So the 200-day is actually above the 50-day. So that could show that there is a downward trend with this stock. Even if you look here, one thing that's great about looking at technical analysis, you really want to look at the dips in the market, which you can see there was a dip there was a dip here, and there was a dip here. So I always like to look at these levels as support when I see these dips, which the support for AMD right now is $76.40, and the resistance is at about $78.01. So right now we're right in the middle of that. Actually, the price as of the previous market close was at $77.86. So one way that I would play this is just essentially knowing that since I still have a little bit more room for it to get to my resistance level, I would still continue to look at this as a potential buying signal. I definitely know that the 200-day is above the 50-day, so it certainly is fluctuating up and down right now. But I think that AMD, I look at it more of as a long-term play, and it still has some room to grow. But this is kind of great to kind of do analysis to be able to understand just the cadence of the market, and it really helps with being able to balance your emotions, because when it comes to the market, if you don't have a trading strategy or an investing approach when it comes to the market, you can put yourself in a position where you allow yourself to get too emotional when it comes to making decisions when you're doing your investment analysis. And some of the most well-known approaches that you will hear when it comes to investing is the top-down and the bottom-up approach. And a lot of times, short-term traders will often focus on a top-down approach where they're looking for short-term gains as opposed to long-term valuations. So for example, a trader may signal a buying opportunity if they see a stock has went over the 50-day moving average. So in the case when we looked at Apple, they are moving in the trajectory of going over the 50-day average. So an investor will be looking at this as a buying signal. Now, long-term investors, they tend to focus on a bottom-up approach where they're looking potentially for entry and exit points. So for an example, an investor may look at an undervalued stock that's in the bearish trend and use technical analysis to identify their entry point. So kind of like what I was talking about with AMD, since the 200-day is over the 50-day, it is presenting a trend right now where it is bearish, but at the same time, as an investor, you can look at this as an opportunity to get in at its support level and then hold it for the long term. Because with this approach, the reason why I like it is because I always try to find a diamond in the rough and looking at ways of how I can hold it for the long term. Even if you look back for the pandemic, when that happened last year in March of 2020, there were many stocks that, hit those support levels, even went below those support levels, and people were able to find quality companies to get in at a discount and were able to recover and have 10 times their gains by the end of the year. So always keep in mind, whenever you're investing, whichever asset class you're looking at, you want to focus on the trading strategy. And with my strategy, I like to set a stop loss at my support levels of a stock. And if I feel a stock is overvalued, I like to do a sell limit order to lock in profits at the resistance levels. And with a stop loss, it allows me to monitor my risk on the trade and preserve my capital. For example, if I bought AMD at $78, I can set a stop loss at 10% below the market price. So I will put my stop loss at essentially $71. And if the price gets below that, the market will immediately is going to sell my order at the next available price. Now, you also have a sell limit where essentially you can, I would, put a sell limit at the price. So let's say the stock of, we'll use the same example, and let's say AMD rises to $88. If I look at the chart and I see the resistance level for the stock is at $85, I will put in the sell limit at $85. So this is, one way how I can be able to make sure that I'm locking in profits and also being able to manage my risk. So this is what I like to use when I'm working with my trading strategy in the market. And I like to use simple strategies that allow me to minimize risk and make consistent profits. There are tons of technical indicators out there, but I say try different ones and find what's the best for you. But I know me personally, I like the moving day averages. I like support and resistance. Looking at the price channel indicator, which is an indicator that allows you to be able to look at two parallel lines within a specific period of time and seeing if there's an upward or a downward trend. So that does wrap it up for this episode. And one thing that I can say, that when it comes to technical analysis, make sure that you have technical indicators that allow you to be able to make those sound decisions within the market. Take the time to be able to develop your trading strategy that works best for you. Minimize your risk and always look at preserving your capital. Never expose yourself, and always have the proper risk management. And when it comes to technical analysis, it really just essentially allows you to be able to look at trends and patterns and looking at historical history, so you can be able to make a sound decision on the future price movements of what a specific stock is going to do. So if you all can continue to please like, subscribe, and share this video, that would be greatly appreciated. Thank you so much for supporting Insightful Principles with just all the feedback I've been getting. It's been greatly appreciated. And I am still doing the giveaway. Right now, I'm at about 13 subscribers away from the giveaway goal. But like I said, continue to like, subscribe, and share this video. Part of the giveaway is you have to essentially do that. And you also have to comment on episode 50 that I released not too long ago. And if you can share uh, that episode on your Instagram story, or even this one, and tag Insightful Principles and mention to subscribe, I will be entering you into the contest. Like I've mentioned it before in the past, I will be giving away a $70 Amazon gift card. So certainly, if you are wanting to take advantage of that, definitely continue to support, and I certainly will be announcing a winner very soon once I get to that goal. I'll put all of my information in the show notes, and if you all can continue to support the Patreon page, where I'm creating exclusive content in the areas of finance, investing, and business, that also will be very helpful. And I did want to tell you all, thank you so much for tuning into another episode of Insightful Principles, and take care.